Hi, this is Michael Talis with the Talis Team. Volatility, uncertainty, and confusion. These are the most common feelings about the economy triggered by the April 2nd announcement of the beginning of tariff wars. Then, on April 4th, stock market dropped by roughly 6%, triggered by China's announcement of retaliatory tariffs. And just 5 days later, after the announcement of a 90-day pause on many reciprocal tariffs, it jumped up by more than 9%. But I am talking about the real estate market here. The real estate market can't move at the speed of news or stock market. You can't day trade real estate. Most home sales are driven by lifecycle events, changing jobs, growing families, need for schools or commute, marriages, and sometimes divorces. These are the life changes that to a large extent drive home purchases and sales. And if you can sell one stock and buy another in a matter of minutes, if not seconds, it takes time to prepare a home for the market, find the right buyer, negotiate a sale agreement, and get the deal closed. Two main factors are driving the buyer's behavior in our area. First are the stock market and the economy. With a large portion of the compensation packages for our tech workers being in stocks, the market performance affects their ability to come up with the necessary down payments. Large stock swings, especially if someone is heavily invested in just one or just a few companies, may discourage potential buyers from entering the market and will keep them in their current homes. Another factor is the mortgage interest rates. With the economic uncertainties on the horizon, 10-year Treasury yields are not coming down, keeping the mortgage interest rates above 6.5% level for the most of this year. For many buyers, finding their monthly payment sweet spot requires a delicate balance between the size of their down payment, managing their investment goals, and finding the right mortgage program. After the tariffs announcement, many expected that the real estate market will slow down, finding a home will get easier, and home prices will start trending down. But as I mentioned at the beginning, the housing market is moving at a glacial pace compared with the stocks, and it will take time for the market to change gears and adjust to the new economic realities. We can try to predict these changes, but we'll be able to recognize them only in a rearview mirror, just like with the recessions. Here in the Bay Area, in Santa Clara and San Mateo counties, the median home sale price continued to grow in April and reached $1,740,000, a new record and a 3% increase year over year, and a 5% increase month over month. Median time on the market remained very low, just 9 days in April of 2025, even though it is a day longer than in March, as well as a day longer compared to April of last year. The early indicators of a slowing market is an increase in the number of homes available for sale. The inventory grew to more than 3,300 active listings, a 27% increase from just a month ago, and inventory reached 2.1 months. It means that it should take 2.1 months to sell all available homes at the current pace of sales. Note that so far, the market is still firmly in the seller's territory. Conventional wisdom is that 6 months of inventory is needed for a balanced market. The inventory growth was driven mostly by the increase in the number of new listings. The number of new listings jumped by 23% year over year. Almost 3,000 homes were listed in Santa Clara and San Mateo counties in April. The number of closed deals remained almost the same as last year. A bit over 1,600 homes got sold. The number of contingent and pending listings, the number of newly accepted contracts, decreased by 3.4%, driving the number of homes available for sale up by more than 62% year over year. Will this market shift develop a fully blown housing market crash? Most likely not. And there are two major factors that will support the housing market, even in these uncertain times. First is the wealth of the homeowners. 48% of the owners with mortgages have at least 50% equity in their homes. And on top of that, almost 40% of homes are owned free and clear. Their equity is 100%. Even if these homeowners fall on hard times, they will be able to sell their homes on the open market, negotiating the best possible deals for themselves. Only 2.5% of the homes are currently underwater. The second factor is chronic shortage of housing here in the Bay Area. According to some estimates, we may be short of 300,000 housing units. Most of the buildable land close to Silicon Valley employment centers was already developed, and here on the peninsula, we're limited by the bay on one side, by the mountains on the other, and by the cities that are stacked one against another all the way from Golden Gate to San Jose. The only way to grow is up, and it is a hard proposition for most cities and for the most of current residents. If you are a buyer, now you have more power to negotiate. With more homes on the market competing for the same pool of buyers, you can expect fewer offers submitted in multiple offer situations. You also will have more chances to negotiate one-on-one with the sellers and get more favorable terms for yourself. Keep in mind that not all areas are affected to the same extent by this market shift. Single-family homes in top-rated school districts are still selling like hotcakes, especially if they are in move-in condition. On the other hand, condos and townhomes are typically staying on the market longer and draw fewer offers. If you are thinking about selling your home in the near future, be open to all buyer offers. Remember that an offer is just an invitation to negotiate, and nobody knows how far you can take it. It may take longer to sell your home than in recent times, but we don't expect prices to collapse like back in 2008, 9, 10. Homeowners have too much equity in their homes, and there seems to be huge pent-up demand that will absorb all available housing inventory. This is Michael Talis with the Talis Team. If you are thinking about buying or selling a home within a year or even two, let's get together on the phone or on Zoom to review what you need to do to enter the market and to complete a successful purchase or sale. My contact information is in the description of this video. Keep in mind that I'm available in the evenings and on weekends at the times when you are off work. I am looking forward to connecting with you. Till next time.